more than 7 lakh people commit suicide in India. Out of these, roughly 25,200 are attributed to job losses and being in debt. This number has only gone up since the pandemic. The story is similar each time. Loan apps enable loans of small amounts, which many people take several times across different apps. However, if you are unable to pay back, then the EMIs just keep adding up. And all this leads to loan recovery sharks coming not just after you, but your friends and family too. Well, taking a loan is not bad. The problem comes when you start borrowing for items you do not really need. In this video, we are going to dive into some of the most important points that you can keep in mind while borrowing money. But before I go any further, please share, subscribe and hit the bell icon to keep watching Moneycontrol videos. To start with, it is important to understand that living off borrowed money is not a plan that can be followed forever. At some point, you will not be able to get the next loan. And if that happens, you will not be able to repay the previous one, because basically this model is not sustainable. The lure of upgrading your lifestyle in today's times, when everything is available at the click of a button, is really very high. There are nudges all around us telling us to buy more and more of the things which don't last long or which we don't really need. So, as a first step, it is essential to distinguish between loans taken to build an asset versus loans taken for consumption. A home loan taken creates an asset. Either we live in it or generate rental income out of it. Even education loans for that matter can be considered because they help you acquire the skills to repay the loan in future. However, all other kinds of loans linked to personal consumption, let's say buying a smartphone on loan or using a payday loan to buy a birthday gift for your spouse, should not be taken for granted. And in case you are indulging in them, then make sure you have a plan to repay. Some of the broad sets or instructions or thumb rules to keep in mind to avoid going overboard on loans can be: Number 1. Your home loan should not exceed 50% of the value of the house you are buying. At number 2, the home loan EMI should ideally not be more than 40% of your monthly income. At number 3, having a car loan, ensure that monthly repayment is up to 5% of your monthly income and not more. At number 4, if you use a credit card, then do make sure that your monthly spend is not more than 10 to 12% of the credit limit and you repay the full overdue amount before the due date every month. At number 5, education loans can start to become a burden too if you are unable to secure a well-paying job. Hence, keep it as a last option. At number 6, avoid all kinds of personal loans and app-based loans which nudge you to spend on basic consumption. At number 7, and most importantly, in case of a zero interest loan, ensure that not more than 10% of your monthly income goes towards repaying these loans. At number 8, don't confuse a business loan with a loan taken for personal consumption. And lastly, let's say borrowing through apps is the easiest way out. Pay later schemes and zero interest EMIs lure you furthermore. But focusing on living within your means and taking loans only to create income generating assets is the answer to ensuring that your loan doesn't kill you. Hope this video was insightful for you in terms of how you can better handle your credit and borrowing. For more such content, like this video and subscribe to Moneycontrol channel.